All right, today we're going to break down a cat sitting business that we bought. And I never thought that I would be in the cat sitting business, I can tell you that. But we found this fantastic business owned by a wonderful couple, and we just decided to buy it because we thought it was just an incredible business run by incredible people. And that's what we look for. We don't go too far into any specific industry. If we find a great business with great people, we'll at least consider it. So let's talk about the numbers and break down why this cat sitting business made total sense for us to acquire. So we will talk about cat sitting today. Now, when I say cat sitting, I mean a pretty straightforward business model where our employees go into folks' homes and take care of their cats while they're away. So this business was making just a little bit shy of $200,000 a year in annual profit. So this time we'll just go over the annual profit and try to keep things relatively simple, but we'll say give or take about $200,000 in annual profit. When you look at a business of this size, a smaller business, and you think about what it is going to sell for, they will often at this size sell for around 2 to 3x what the annual profit is. It's not always the case, could be less, could be more, depends on the buyer and depends on the seller, of course, and also depends on the opportunity. But oftentimes you'll see around 2 to 3x in annual profit, 2 to 3x the annual profit in what you're going to buy the business for. So in this instance, we agreed to purchase the business for $625,000. So actually a little over 3x. And we did that because of the deal structure, which I'm about to show you, that worked very well for us. And then also because we thought it was a fantastic business that's going to continue to grow further. So 625, and I'll say that is the purchase price. Sorry for my handwriting. So $625,000 is the purchase price, okay? So let's break down why this deal made sense and how we worked through the math, all right? So we paid $250,000 in cash and $375,000 in what we call seller financing, okay? Now, when we say seller financing, what we essentially mean is that the seller becomes the bank. Instead of us having to get a bank loan and taking all the time to do that, the seller allows us to pay them over time. So we only need $250,000 to close on the deal, and $375,000 we will pay over time. So let's get into how the numbers worked on that. So on the $375,000, we are going to pay that to the seller over 6 years, okay, at a 6% interest rate. So we're paying this at $375,000 over 6 years at a 6% interest rate. So what does that break down to if I can check my trusty calculator? That gives us monthly payments of $6,230 a month, or let's do that by 12, $74,763 a year. I'm leaving out the cents here, and that's why the numbers are a little off, but we'll say $74,763 per year, okay? So, as you can see, the business is already making $200,000 in annual profit. So even with us paying the seller the $74,000 in change every year, we still have, do the math, over $125,000 in free cash flow. So to break that down again, we paid $250,000. We immediately start making $125,000 per year, okay? And of course, we can grow the business in time so that those margins get bigger and we make more money over time. So again, it's going to be hard to find a lot of opportunities out there where you can put $250,000 down and start getting $125,000 back each year right away. And then on top of that, grow the opportunity so that in the long run you make hundreds of thousands of dollars and probably down the line even sell the business for millions of dollars, all for a $250,000 investment. So if you go and you take that $250,000 and you put it in the stock market or you put it in real estate or you do something else with it, you might get a decent return, but you're probably not going to get the kind of return that you can get on buying a small business because you get that $125,000 of free cash flow right away. Day one, the business is already operating, you're getting $125,000 in free cash flow. Then you're growing the business over time. And then, of course, after 6 years, these payments are falling off as well too. So that $74,000 comes, right back to you at the end of those 6 years as well too, on an annual basis, right? So by the time you get to that end of those 6 years, you're back to making $200,000 in profit plus any other additional profit that you've gotten by growing the business over those 6 years. So hopefully this is another straightforward, simple example of how buying small businesses can work out great for you.